Howdy, howdy, folks. Howdy, howdy. We got a big old live today. Big old live. Somebody very near and dear to my and our hearts at OBR. We've got an incredible guest coming in from Team Bull. And I know you guys love this gentleman. He is a phenomenal individual. Hey, there you go, Rohan. What's up, Beast? Nick's in here. What's up, Nick? Howdy, howdy. Microsoft already typing in the tickers. I love it. I love you too, Rohan. There you go. I see you, interiors. I see you. I see you. All right. He'll be popping in a minute. We got the one and only JDUN coming in hot today. The one and only. So he'll be here in a minute. What's up, Barber? How are you, Beast? It was good chatting with you today in the live call. You guys are killing it. Thank you so much. Short Spy? Oh, that's a little pessimistic. It's a little pessimistic. You are the man. You the man. Lulu going to be the next doc. Nick, dude, I ran a huge Lululemon play a little while back. Yeah, Jadon's a little under the weather, but he's still grinding. He's an absolute animal. He's an absolute animal. Well, both of you, I couldn't believe I see you two are like, yeah, we are. We like a lot. Here we go. Here he is. Man, the myth, the legend. What an animal, and a pleasure to have him here. Should be loading up here momentarily. Did I not accept him? Oh, it's not letting me.
Let's go, bro.
There we go. What's up, Beast?
How we doing, fam?
I'm doing incredibly well. I am absolutely just ecstatic to have you on tonight, and I could not appreciate your time more.
You said the man, the myth, the legend, but I think you were talking about yourself.
I was too much credit, and I really appreciate you and your time. And we've got an incredible live call for everybody. We've got a lot of people that know exactly who you are because we talk about you a lot, talk very highly of you. But for those who do not know about you and how highly I think of you, please provide just a little bit of a background and introduction for you.
Yeah. So, my name is JDUN. My name is Jacob. People call me JDUN Trades on the internet. I'm a day trader, investor. Been trading for about 6 years now, and I'm here to teach, here to trade, and here to vibe and give some good solid value to the community.
It's beautiful.
So I guess like a little more as I started trading. I grew up pretty poor. I didn't have a lot of money. Didn't want to work a 9 to 5. College wasn't really my thing. I went to 2 years, but I just knew like it just wasn't personally for me. Not to say it's not for everyone else, but just for me, it just wasn't it. And so I got in YouTube and stuff. I was like, there's day traders and all these people making all this money. If they can do this, why can't I? If they can invest in day trade or whatever and, make all this money, what's to say that I can't learn this too eventually? So that kind of started the train, bought a bunch of courses and education, read a bunch of books. And now we're on this live talking and teaching people how to trade and invest. So it worked out.
Well, that's incredible. And there's so much that you didn't talk about that led you to where you are right now, which, again, you talked to me a lot about it. Your discipline, your consistency, how diligent you are as an individual, all very incredible. And I'm very, very admirable on my end. So I appreciate that.
Of course. And for everyone in Team Bull here, Clayton and I, English, have met before. These guys are awesome. They do a bunch of interviews with different traders. I'm sure this won't be the last time we meet. And these guys are great people, great traders, and definitely worth a follow if you're watching this. So these guys are awesome.
Thank you so much, and same to you as well. We talk about you a lot. I mean, we see a lot of what you're posting. You post very directly applicable content that's helping a lot of people, which we're so greatly appreciative of. Which is why I choose you most of the time in order for me to just be able to pick your brain a little bit, see what you're doing, see how you're thinking, see what you're managing, see what you're playing with. So for me on my end, just a little bit of an introduction. I graduated high school in 2018, went to college in 2019, realized something very similar to our friend Jacob here, that college wasn't going to do it. College wasn't going to do it. I wanted to work. I wanted to be self-sufficient, and I wanted to make sure that I was taking care of myself so that I was not my parents' responsibility anymore, because they were doing everything they could to provide me what they could. And so I wanted to be self-sufficient. I wanted to take care of myself. I wanted my parents to have a son that they didn't need to worry about in a list of different ways. Again, I'm the son. They're always going to worry about me. But I moved into trading. I worked in corporate finance. I did asset management. I did asset protection. I did private security. I did cybersecurity. I did a whole bunch of different jobs, even considered the CIA, the military, a whole bunch of stuff. And the only thing that stuck with me is working with people to build a larger project image, work on something innovative. And the only thing that was keeping me from investing in innovative projects and being a part of them was capital, and also understanding how that world worked. And I felt like the best way to do that was through trading and being a part of the largest network of invested in companies, which is the stock market. So
that's amazing. I love that, bro.
Appreciate it. So run me down on what Team Bull's doing. How have you been this week? What are you looking at? How have you been playing the market? Market's been extremely choppy. How have you been addressing?
Yeah, so as I was telling you earlier, last week was a little slow for me. I ended up clearing about $2,300, which, as of the last year has been way below the weekly average. It's been trying to pick high probability setups, follow your trading plan, follow our trading plan. And this week's been really nice. Obviously, we've seen some very green days, which comes along to some very nice profits if you're doing your thing correctly. But I wanted to come on too, and as I talked about earlier, show a few of the trades I took, kind of show how I trade. Then obviously you can show how you trade, some setups you've taken, and give these people some value, give them some teaching while we're on this live.
Right. No,
that being said, do you want me to go ahead and show what I traded today? Do you want to start with that?
Absolutely.
All right. All right. So I took 2 trades today, right? I got my charts pulled up for you here. We'll start with Apple. Now, if you guys have seen lately, Apple's been on a huge run. If you've been watching stocks, of course, you know that. We've done nothing but pretty much go straight up. So that's step one that I take into consideration is I've looked for strong stocks, right? Apple's been very strong. Even with the choppiness in the market, Apple was one of the names that remained very strong. So looking at a pre-market, I always start in the hourly chart, right? And when I'm looking at this on the hourly chart, I typically have one over here, right, that's blank. We see this. And then over here, I pull up my supply and demand chart, which let me pull this up here. I call it my spaghetti chart, as we'll see here. And let's get, this looks insanely awful and anxiety inducing. Let's do that. All right. So looking at this, right, these are all different levels of supply and demand. And again, this might not be your strategy, but this is where my edge is. So I look for areas where we have this 20-day EMA. We see this purple line right here, this closed 20 right here, 20-day exponential moving average, right? I found this is very nice for bounces. So going into the day, seeing this 20-day EMA here, seeing this low from post-market yesterday, these correlate. So I look at this. At this point, I marked down in my morning watch list that I'm watching for a bounce on Apple at 170.8. And just for anyone who, sure are some haters, I always mark it down. So 170.8 area bounce right there. So I marked that down for myself. And that's what I watch for there. We open up the day. Let me take this off. Let me take this off here. Looks ugly. Go to the 5-day, 5-minute chart. Now, when I'm looking for bounces day trading, right, I want to see us come down immediately. Now, obviously with long term, this is much, much different. When I'm day trading, the reason I want to see us come down to this bounce immediately is typically when we have strong stocks and we have a little gap up, we'll see that profit taking it open. And if we come down immediately, a lot of times it's, I don't want to say fake selling, but it's not justified selling enough to keep going down. So we have a strong push down, right? Buyers step back in, we level out. And as you can see, it works out beautifully here. We come down to 170.8. We see our buyers step back in on the level 2, which is this, the bid and the ask. We'll go over all that later. See our buyers step in. We reverse back up. We have that nice flush at open. Love to see that. So whenever you're looking for bounces in general, I always say if you have a level, make sure you want to rock it down or trend down right at open. You don't want to slowly trend around and then wait for the lower volume in the middle of the day. Because if your bounce spot comes in these hours of the day, there's a good chance that HFTs or high frequency traders or algorithms are going to end up taking over your trade and you're going to get smoked. So middle of the day, not the time, at least for me to trade. I watch for my bounce spot to hit in here. And people are saying there's no video.
No, I can see you just fine.
Are you guys good in the comments? You guys good?
Can we get some JDUN's clear?
Can we get some thumbs up?
Yep.
Can we get a thumbs up?
We're getting everything but what we asked for.
Yeah, gee, I can see. Okay. We got some people good. So that's what I want to look for when I day trade and find bounces at open, right? I mainly use the avalanche chart. I use my supply and demand. I look for those key areas of support and resistance, and I keep it very simple. Some people keep on, they have a bunch of indicators like their MACD and their RSI and this, and I think that makes stuff too complicated, right? That's just not how I trade. I go off price action. I go off where buyers and sellers are, and I keep it. I like to say KISS. I keep it simple, stupid. So I went off there. Second trade of the day was Airbnb. I talk about this strategy a lot. It's called the orb, or the opening range breakout, 5-day, 5-minute chart. And this is where you see, all right, we go to pre-market. We touch this area around 186 once, and we touched it right at market open, right? So when we make this high at market open, this is what it's called our opening range breakout level, right? Touch here. We have this resistance over there. We trek around. We find the bottom here, have this reversal candle here, come back up, and we break through this for a move up. Now, this doesn't have as much continuation as I would typically want to see day trading, but we come up, entered right here at 186, trimming on the way up to 187.5, only a $1.50 move. So I guess you could consider that a false breakout if you didn't trim, but nonetheless caught a little something off it and then ended up going down, obviously. But that was my second trade for the day. And, that's one of a few strategies that I use. I don't use a ton of different stuff when I trade. I like to keep it very simple. And that's what I do. That's what I did today. So enough about me and my trading. Let's hear about you and your miracle ways of getting crazy gains.
Well,
in the stock market.
I appreciate that very much. I was very interested in hearing about what you're talking about. I think one of the biggest things that we can do as traders in regards to those who provide, educational help and help in general to our members is that we can try and make it as simple as possible. And for JDUN and I don't mean to speak for you, but we do keep everything that we do relatively simple. And then our discipline that we do our best to deploy as much as possible is what provides us the consistent returns of what we're looking for. On top of that, we reflect, we document, we reflect, we wash, rinse, and repeat. We look at the mistakes that we make. We look at what our shortcomings are in regards to deployment, trading, observing different analytical trends, technical trends, and we fill the gaps. And that's how we're addressing our growth, and that's how we're guaranteeing our growth year over year. So JDUN's been around for a while, right? I've been around in the market for a little while. I'm trying to make sure that in 20 years, I'm still around, and nothing that's happened in the market has shorted me out of it. I will do everything on my power to make sure that no market maker, no institution can kick me out of the market. So
None.
without, aside from that little spiel.
And real quick, I want to mention, you mentioned market makers and institutions. I think a lot of traders don't realize that, in the market, like 80 to 85% of the volume is market makers, is institutions. So as, your job as a trader, Clayton, and my job as a trader, JDUN, is to be where the volume is and be on the market maker's side. You don't want to be on the opposite side of all the market makers and in institutions, because that's where you get smoked.
Right.
Most of the real volume in the market is big firms, is what I call it smart money. And retail is just a drop in the bucket. So you got to make sure to read volume. And like Clayton said, you don't want to let the market makers kick your butt.
No, I agree with that wholeheartedly. And I talk about that all the time. Every time there's a price target that's sent out, every time there's news on a company that's from a bank, not from the company, everything that's provided to the general public, unless it's shown on the charts, it's noise, right?
Yep.
It's something that's taken into consideration, but unless the charts are telling you that that's important information, it's noise and can be removed or kept for a later time. And I agree with you wholeheartedly, because the noise is created by our news networks. It's created by the banks. It's created by price target alerts. It's created by any institutional news based on their beautiful and perfect opinion of a company, right? So trust me, I agree with you wholeheartedly. Maybe not as interesting. I took 1 day trade today, so I can bring that up. We bounced off of a major support with TQQQ. Buy volume across the market flew up, specifically the tech sector. I scalped it for one candle, got out, took a lap, and realized I don't have the goal to do day trading.
Your armpits are sweating, your hands are sweating.
Knees weak.
I feel that, bro. I feel that.
I realized I couldn't do it. But on the portfolio management side, I did have a list of transactions in the past 2 weeks. There were a few different things that happened. The first thing, just going over overall market, the S&P 500 fell to about 5.1 to 5.2%. So that being said, for a long-term trader, that just provided a whole list of things that were discounted, primarily the ETFs at 5%. Since SPY's sitting around 20% year to date, a 5% drop is phenomenal for me, right? That's phenomenal, especially if I have
amazing.
Right. Especially for equity. If I have my credit spreads, which are about 8 months out, that's a 5% dip on 8 months. You know, even if we went up higher and had another 5%, I'd still be deep in my share price upon my entry. My leaps that I got in around that time, a year and a half out. And I was doing $100 out of the money to keep it cheap, get a bunch of contracts. And if SPY continues its average rate of growth, even with additional pullbacks, which I left capital on hand to purchase, to average down those leaps, you know, 3 months or 4 months later, if I need to, I'm still doing 200 or 300% on those leaps with a conservative rate of growth from SPY. So that's all calculation based. For today specifically, Apple, you brought that up. That was my major thing today. I hold blocks of Apple shares in 100 share increments, and
Of course you do. You're a smart investor.
I
More above it 2.0.
I appreciate that very much. Apple is an incredible long-term stock, and it's something that I will hold forever. And every time Apple falls, drops, trades sideways, comes back up to previous level, breaks new resistance, and it goes up year over year over year over year. It's a $2 trillion market cap company. It's not going anywhere. It's just not going anywhere. And that being said, on those covered calls, one of the things that I do is I run covered calls on those increments to add an additional 2 to 3% growth on the year for my equity that's doing X, Y, and Z percent growth per year. So I'll come in, and I went all the way out to this summer. I went out to June, and I covered a bunch of calls at the $200 strike, got $300-400 per call. And that also acts as a bearish hedge for me, because if the Apple breaks these resistances, trades sideways here, and then falls $10-15 a share in the next pullback that we have, I'll be able to cut those covered calls for a 60% return, let the market rise back up, clear it again, wash, rinse, and repeat, and get more premium out of that and consistently add to my percent return without paying a dime on puts, on bear call credit spreads. I don't spend money where I don't have to. There's no.
You guys got to be. This is all free game. You guys got to be tuning in and taking notes on this. This is fire.
I appreciate it.
You're preaching it, bro.
I appreciate it.
And in a way that's less stressful than day trading, right? Like it's definitely it just is. Day trading can be awesome. Obviously, it's a nice way to make money quick. I mean, if you get good, but like what you're saying is more of a conservative way. And I saw someone earlier say, when you were talking, they said holding stocks long term seems boring. And just here's the deal: is that whether you're day trading or investing long term, good trading is boring trading. It's not supposed to be fun, and that's the problem. Like that's why everyone always asks me, JDUN, like, did you like the AMC stuff? Do you like the GME stuff? And of course, you know, we like to see the people eat, but that made a lot of really bad trading practices and a lot of new traders. They thought that trading was supposed to be gambling. They thought it was supposed to be fun and super heart throbbing. And, you know, that's when you end up getting smoked. So that was just, I want to throw that 2 cents in there, that good trading is boring trading. This is not supposed to be something where you get up and just bang out trades and jump around and have, you know, parades and shoot confetti. And that's just not how good trading is. So just want to throw that out there.
No, I appreciate that. That's a very valuable perspective, because if I'm bored, that means I'm not upset. That means I'm not angry at what's going on. If I'm bored, that means I've done what I need to do and everything is in motion. And if I'm bored, chances are, if I ever get bored, that's probably when I'm at my happiest, right? So, and for me specifically, I usually ask the live calls guys this, and I've asked this before. Would you be able to handle taking profits one time a year for your entire annual income? And the question behind that is there's a couple variables involved. Patience. Do you want it right freaking now? And can you trade on a long enough horizon that you can see yourself doing this in 12 months and you have to wait 12 months for your first paycheck? And a lot of people have no interest in entertaining the conversation. And all I care about is my Y/TD, my year-to-date profits annually. That's what I care about, my annual percent return and how I can average that year over year over year and how high it is year over year. That's what I care about. So I get questions all the time like, Clayton, what kind of day did you have? You know, how'd you trade today? What profits did you take today? I'm saying, well, today I really didn't do anything. I was buying on the downside, cut a couple covered calls, had a good day. Return on the month has been good. Numbers are there because I've been doing this kind of, I've had this ideology for a while, but just to your point, I mean, sometimes I get bored because I've done everything I need to do and I get to sit and talk to people all day.
And I mean, it's statistically proven what you're doing is the best way long-term to generate wealth, you know, the safest way. So you're killing it, man. A few people asked you, I just want to clear it up. I'm still pretty sick. Got like 100-degree fever, but that ain't nothing towards the grind. So just a few people asked, want to clarify, we're fine. Still decently sick, but you know, the grind always comes first. I could have 120-degree fever and I ain't missing out in OBR. I promise you that.
And likewise, I appreciate that very much, and I hope you feel better soon. And I know you will because you're just too stubborn to feel any way different. So I love that about you. So, in regards to anything else that you're doing or your overall market understanding, what you're looking for, let's say in the next couple of weeks to keep it short term for folks, is there anything that's on your mind about the current market conditions?
So something I did do is I went crypto shopping on that dip. You know, I'm kind of like you when the stock market dips or when crypto dips, a lot of people fear sell. I'm like, awesome, this is a discount. It's Black Friday, you know. So when that happened, you know, I bought a lot of Ethereum, bought a lot of Bitcoin. I still think we could go lower. You know, I wouldn't doubt seeing Bitcoin in the low 30s. I wouldn't doubt it at some point. And if that happens, guess what? I'm loading up more. You know, I look at it from a long-term perspective. So I don't really go into crypto a lot. I invest a lot in it. Grizzly, I know you do too. I like BET. I like Ethereum, like Bitcoin. You know, there's some other ones that are controversial back and forth. But, you know, every time there's a dip, I load up, just like with SPOT, you know. I always, on those low 450s, I was buying, you know, 5-10 shares a day, which is crazy, but, you know, I'm always trying to buy at least something. You know, I'd rather buy $1,000 or $2,000 worth of SPY when it's in the 450s, 440s than buy none. Even if you buy half a share in Robinhood, even if you buy $100 worth, isn't that better than nothing? Wouldn't you rather invest something rather than nothing?
Right.
That's what I always tell people. You know, is you got to look at a long-term perspective. You know, eventually the stock market will go up. If you've read Dark Pools by Scott Patterson, it's a book on HFTs, how the stock market was made and how it's plumbed. Right. The stock market is made to go up. That was how it was developed to be. Over time, it will go up. Even if we have the worst economic crash ever and it tanks like COVID again, it will go up over time. That's how it was made. So a lot of people don't realize that. They haven't, and they haven't done the research, so I get it. But, you know, like you, I have that long-term mindset too of, you know, if there's dips, you know, buy it. You know, it's made to go up long-term. You know, you're just investing in yourself. You're investing in, you know, 25-year-old, 30-year-old you, and you're going to thank yourself in 5-10 years.
Well, there's a lot for me to uncover with that, and I'll address the thing first because that's entertaining to me. So for me specifically, this month is the first time that I've allowed myself with liquid cash that I've kept on hand, which is cash available, to buy into crypto. And I just have not had a whole lot because I've been reinvesting in the market, something that I know well, in my opinion. I've been reinvesting. I reinvest 85% of my income.
Nice. That's amazing.
And I'm trying to make it 90% and then 92%. And I'm getting there by, you know, as it increases, 92%, 93%, that'll increase too. So for me specifically, I had a bunch of cash on hand and I was, for whatever reason, up at 1 a.m. on Saturday when the crypto market fell to
lucky you.
It was, I couldn't believe it. I just thought to myself, okay, well, maybe this is my time. So I bought a bunch of Ethereum.
Nice.
And I'm very happy about that. I got into some Nano. That's a fan favorite for OBR for a list of beautiful reasons.
Love that.
Bought a little bit of Cardano because I actually started trading crypto first when I started getting into the stock market stuff. Because, you know, I thought to myself, oh, maybe I could get myself some cash if crypto ran, etc. So, you know, goodness gracious, if I had bought Bitcoin back at $6,000 when I took my first trade on Robinhood 3 years ago, whatever. So,
dude, speaking of that, I've told a lot of my homies this story, but I had an older stepbrother. I'm not going to go into details, but we were on the internet back when I was 15 and 16, and he was showing me some stuff, and Bitcoin was like $280 a coin. I remember this conversation to a T. I was telling him, I was like, who would buy the scam $280, $300 coin? Like, screw this. And that conversation still haunts me to this day. I'm like, JDUN, $300 a Bitcoin.
We always make mistakes, and there's nothing wrong with that. And as long as we're learning from them and reflecting on what it is that we're doing, there's no issue. There's no issue. Because I was crypto is something I know very little about. I can have a very thorough conversation on the inner workings of crypto and the fundamentals and how it works and the different coins. But that being said, other than that, my competence in the crypto market versus the stock market is night and day, in my opinion. So I sat down, I thought to myself, what can I allocate and not kick myself for? Allocated into Ethereum. My average cost in Ethereum is about $3,800 on that pullback. So I was very happy about it. I'll just sit and leave it there. And my strategy applies in crypto just like it does in the stock market. If crypto has a 30 to 50% fall and I've got some extra cash laying around, I'll put it in. Why not? It's going to be around for a long time.
I personally still think Ethereum's going to be 10, 20K one day at least.
Why not?
I seriously, and here's the thing too, right, is that in the world right now, 3% of the entire population, around 3%, has adopted some sort of crypto, right? It's not regulated, and around 3% has adopted it. So what happens, with the metaverse coming, with all, these different online things coming, what happens if we get to 10%? Bitcoin isn't like, Bitcoin isn't like the US dollar where you can just print unlimited. There's a finite amount. And so we're at 3% now. So what happens if we get to 6%, to 10%? Supply and demand, that's the bull case. Obviously, there's a lot of bear cases. But I'm personally extremely bullish on crypto. I think Ethereum and Bitcoin are going to be the big winners. Maybe some other little ones that, that's debatable. But I think we're going to see some big moves from Ethereum. And I still think we're very, very early, in my opinion.
No, I agree. And I think for a very long time, even the next 10 years, I think cryptocurrency is still going to be in an infant stage. I mean, there's going to be so much that it's going to be able to that's going to be developed. There's so much going on that I can't even wrap my head around that people are just throwing at me in regards to the development side, project side, how it's applicable, the energy side of things, software develop. I mean, just there's things that I cannot wrap my head around right now that will be 20 times the capacity in 10 years. And
it's crazy. It's crazy.
It's the same goes with any singular asset, pretty much, like in regards to real estate, the stock market, crypto. You buy good products, you buy good companies, you buy good coins, they will appreciate in value. And if you go back, if you don't believe me, go back and look at a 50-year chart of the S&P 500. Go back and look at the last 5 years of Bitcoin or Ethereum. Doesn't matter what it is, or the housing market. Just all I'm saying is money spent in an asset is better than money spent on a full bottle on a Saturday night.
Facts.
That's what I'm saying.
That's a lot. Like a lot of people too. Like a lot of beginner investors think like, they I can't invest $50 in Ethereum. It's too risky. I can't invest $50 in the S&P. It's too risky. But they'll go spend $180 at the bar on a Saturday. It's like, come on, fam. Like you got to think about future you. Yeah. And something I wanted to add with crypto too is a lot of people have all these millions of different little coins. If you're one of those people, for one, I advise you to do your research. But for two, go look at the top coins from 2014. Almost all of them, besides Bitcoin, besides Ethereum, and I think that's it, are gone. They're just not existent anymore. And the same thing's going to happen with all these little, I don't curse on these, but we'll call them S coins. The S coins right now, a lot of them are going to be gone. Just like they were in 2014, they were there and now they're just nowhere to be seen. So keep that in mind. We'll probably see the big dogs stay, Ethereum, Solana, Bitcoin, there's some other good ones, but a lot of them are going to disappear and a lot of people are going to get burned.
Yeah, I agree with you wholeheartedly. And a blue chip is a word that's slung around a lot, but in every single market, you have your blue chip projects, your blue chip coins, and your blue chip stocks, right? You have your stocks that people have billions of dollars in that they will not let fail no matter what. Same with Ethereum, same with Bitcoin, same with duplexes and triplexes in high populous areas. I can go on and on about where you could put your money that will benefit you long term. And I say this in my live call a lot. I focus on my long term so I can enjoy the present. Because if my long term's not covered, I cannot enjoy the present whatsoever. But the present is what builds my long term.
Facts.
So something to
And
think.
something with present and long term too is people that are day trading. Right? I always say this, right? If you're day trading, if you're making good money, if you finally get it down, you find your edge, your goal day trading should be to make money day trading and then to take that money and put it into your long term stuff. That's why it's so important to know both. Like if you make, like you said, you made like $800, $1,000 a day trading. I'm sure you're going to take that and you're going to put it in your long term to some extent.
Yep.
You're not going to go blow it on a Gucci bill. That being said, if you want to go flex and live your life here and there, that's fine. I'm with that, but like the end goal should be, day trading, making your money short term and investing it in your long term.
I agree with that. I agree with that wholeheartedly. And guys, if you guys have jobs, if you're finishing up school, if you have a source of income that's not being taken away to expenses, and even if you do have expenses, if you can allocate a little bit to educating yourself first, invest in yourself. If you invest in others, invest in different things before you invest in your mental health, your education, your physical health, then you don't believe in yourself as much as you should. And I know that might sound selfish, but in regards to me, I had to find the individual that I wanted to be and that I knew I could be far before I started opening myself out to others. So it took me a while and a lot of soul searching to realize that there's certain things that I wanted to do, that I was interested in doing, and that I wanted to help and work with people. And I needed to find a way that I could do that and articulate it in a form that I was interested in doing. So that being said, you guys have jobs, figure out how and what you can do to learn how to potentially get out of that job, right? If you want to own your own business, educate yourself on how to do so. There is nothing that we are not capable of doing. If you have a laptop or a phone or a public library, you can learn more than my parents could at their age. Unquestionably.
Facts.
Unquestionably, you have everything at your fingertips.
I always say that, like, people like us, right? And like hustlers, let's say in general hustlers, right? If you took all my money away at age 25, I'm confident that I could run it back up, between investing, working commission jobs, serving. I'm confident I can run up $1 million by, early 30s. No doubt about it. And if you have the skills of social media, of investing, of the mindset of, I'll sacrifice, this and drinking and, everything else, and I'll focus on me. I'll save. I'll learn people skills. I'll work high commission jobs. There's no stopping you. The only thing stopping you is that person in the mirror. And so, not to get all motivational, but that's my opinion on that. Whether it's learning long-term investing, running up some M's, learning day trading, learning how to sell cars, it all starts with you. So I think we're all capable of doing a lot more than we give ourselves credit for.
No, I agree with that wholeheartedly, and it's a big issue here because, our communities are very much based on education and sustainability, right? And that's what we really focus on. And, it's very difficult to have conversations with people who have not quite fully developed their intentions for why they would be interested in the market or the cryptocurrency market or the stock or the real estate market or overall asset management. And you have to sit down and you have to ask yourself, why are you doing this? Why are you wanting to be in this community? Why do you need additional income, and why are you looking to develop wealth if that's actually what you're looking to do? There's a list of questions that I ask people. There was a gentleman the other day in our live call who asked me about a day trade, was very upset that it didn't get X amount return. And I asked him, I said, what are you doing this for? What's your intention here? Like, besides addressing, the fact that, we had to go through the entirety of developing a plan, stop loss, how to get in the trade, address what it is that he was doing for the trade. My question was, what's your goal here? Like, just based on the reaction that I, didn't get X, Y, and Z percent, I just said, what's the goal here? What are you looking to do? And these are questions that a lot of people don't ask themselves. So, in the words of Jordan Peterson, your biggest enemy is yourself. The biggest source of competition in your world should be yourself. I talk to him a lot. He's very motivational for me. But that being said, I couldn't agree with you more, and I had to bring that up because you nailed it. I
think too, obviously you guys have your own Discord, and you guys probably see the same thing every day. That a lot of people join just groups in general. Let's say groups in general. Your group, my group, any groups, and a lot of beginners come in and say, they might lose money their first week and say, maybe this isn't for me. I lost money this week. Am I done? You should expect to pay your tuition with the market for months and maybe even years. It took me at least 2 years to finally get my edge. I'm sure when you started investing, you lost a lot of money too. You have to lose to learn. Now the question is, are you going to blow your account or are you going to keep your losses to a minimum? You know, this isn't easy. You know, long-term investing, day trading, none of it is quote unquote easy. You got to learn, and you're going to pay your tuition just like you would pay your tuition, your 40, 50K to become a teacher. You don't get to skip that with trading and investing. So I think that's something a lot of people need to realize, that no matter which group you join, even if it's Michael Burry's group, you're going to have to learn if you want to trade like him or if you want to trade in general.
No, I agree with that wholeheartedly. I mean, that's phenomenal. Again, you and I, we provide as much educational help and backing as we can, because you and I are doing our absolute best for those who are interested in the same game and field that we are. We're trying to cut the learning curve. That's the biggest thing. You know, if I can have somebody sit down with me for 2 hours in a consulting meeting or a meeting within the live call, and I can sit down and I can cut off half of the mistakes that I've made, or at least the majority of the mistakes that I've made, and they can write that down on a whiteboard or a piece of paper and go, all right, he's already made mistakes. He's told me what he's done wrong. How do I make sure I'm developing a comprehensive strategy that keeps these out of it? And then they can figure out what they're going to make mistakes with. If their trading strategy is different, if their outlook's different, if their emotional stability is different in the market. So all has to do with reflection and us doing our absolute best to help you guys cut the learning curve.
Also, I wanted to throw in, my comments are frozen. I can't see anything. That being said, I have my other phone right here that I'm on my other account looking at myself, which is kind of weird. But I'm looking at the comments on this. So if you see me look down, I'm not like ignoring the live. I'm just looking at the comments and like looking at what I can't see, because it's all frozen. So
you're all good. No worries at all. Now we're getting on unbelievably, and I just looked up at the time. We're getting at 40 minutes for this call, which is completely fine with me, because I'd spend another 2 hours talking to you. But if there's anything that you want to address, I know I want to get Carl Horns back on here. I know I want to get Gino in here, so I'll chat with them and would love to get them on a call. But for you, addressing you in the moment, is there anything that you'd like to cover that you think would be beneficial to the 346 people that have been kind enough to remain in here?
No, my biggest thing is just like, you know, whether you're day trading or long-term investing or swing trading, whatever it is, just stay patient with yourself and use less size. I say this over and over and over and over, but, and it's said best, this is one of my favorite trading psychology books, Trading in the Zone by Mark Douglas. Great book. If you want to be a day trader, it's a must read. You just got to do it. Very smart guy. Is that sizing up rarely results in more money. And the reason for that is, you know, like you were saying earlier, you made $800 on a day trade, right? If your heart was beating, you were probably in a little too big. Now, let's say you were in, obviously it worked out. Let's say you were in, a quarter of that size. Good chance you wouldn't have had as much emotion. So on a long-term basis, right? You know, sure, you made $800 today, but on a long-term basis, if you take that size every time and have that emotion, it's going to end up burning you at one time or another, right? And that goes for anyone, any person trading, myself included, going too big, is that when you have that massive emotion, when you try to size up, when you try to make more money, it's rarely going to result in more money, because you're going to have way more emotion. You're not going to follow your trading plan. That's why a lot of people get into day trading and they see a setup. They're like, I see it here. I know it's going to go up to here. They get in that trade and their logic just goes in one ear and out the other. It's like they become brain dead. And all logic goes out. They don't know how to manage their trade. Their heart's beating fast. Their armpits are sweating like they just got done at the water park. Like it's crazy. Now you lower your position size, you're probably going to follow your risk management, you're going to follow your principle, and you're going to follow your trading plan better and make more money long term. Same thing goes with long-term investing too.
No, I agree with that wholeheartedly. And just to add to JDUN's point and reiterate on what he's saying, I had, for that scalp and that day trade, and I take one day trade maybe every 3 weeks just to really entertain myself and make sure I'm not losing the edge on the short-term stuff, and can still retest discipline if necessary if I do see a good opportunity. Today I saw a good opportunity before I even pulled the trigger, which meant I was 2 candles late because I was addressing my plan that I was going to put in place. I had everything clear. I'm very tight with day trades. I usually utilize about a 4 to 5% stop loss. So if it goes down, I'm out. I lost the trade. That's okay. But my upside that I'm looking for, which is my perfect setup for day trades, my upside is in between 20, 30, 40%. Runners pushing the average up to 50%. So if I'm losing 3 to 5% on day trades and I lose them 3 times in a row and then I hit my 50%er, I'm netting far more. So that being said, everything was deployed appropriately. I knew exactly what I was going to do in the trade. I had a plan out for every single thing. The trade could not have failed. It either hit my stop or I won on the trade and scaled out accordingly. And because I know myself as an individual, I was still sweating. I was still sweating. And that's why I've moved over to longer term horizons for expirations and longer term trading and longer term outlook, because myself as an individual just can't handle that short term stuff. I just can't. I spent 2 years trying to do it.
And I bet too, with your long term stuff, like let's say you put half your account in a long term position. Every tick down, you're gonna be sweating. Oh crap! Am I gonna lose am I gonna lose everything? Is it hurting me? Like what's going on? What's going on? But if you put lighter position size in that and slowly accumulate, you're gonna trade within your plan. You're gonna have more conviction. You're gonna have less emotion, and you're gonna give yourself more time for that to go up and more time to execute what you know is right.
Right.
You would never go all in on SPY's at 450. Better go all in, because then it dips to 440, 430, and you're sitting there. You're in trouble. Right. Whereas you buy a little at 450, buy a little at 440, a little at 430, you got that long-term, goal in mind, and, bada bing, bada boom, year or two later, you're sitting nice and thanking yourself you didn't go all in at one price point. You managed accordingly, and I used proper risk management, proper position sizing.
No, I agree with that. And what he's referencing, guys, for some of the guys who know that about me, I'm very calculations-based. I leg in. I have never once allocated everything that I want to allocate at one singular price point. I talk about legging into different price points so that you are getting multiple different supports. And if they break down, you have different allocations for different price levels, percentages down. And that being said, at the end of the day, for me, because I'm as conservative as I am, to fully deployed at a full market crash at 50% down, the deployable cash, I still have 30% remaining. And that's just because of how conservative that I have to be and want to be. And because I know that on the back half, that even if our market crashed, I can go to sleep knowing that if our market crashes tomorrow, I have calculations and everything in place. I know how everything's allocated and everything that needs to be allocated and how to remove myself from it, because I have done comprehensive planning all the way back for about 20, 30 years in the stock market. And I have calculations that are based off of all the empirical data that we have available. That's why I sleep at night.
That's why I need to give all my money to you to manage my long-term, right? You and your computers.
I do like my computers. I like my calculations, and I love my Google Sheets.
Love that. That's amazing, bro.
Yes, sir. So we're moving into the 44-minute mark. I really, really appreciate your time. Again, I would love to get on again so we can roll into some more different principles, go over more of your trades. If we just did a quick call to go over trade ideology, go over some of the things that you're doing with Team Bull, I would be greatly appreciative.
Yeah, we'll be doing these for the rest of eternity.
Oh yeah,
we'll have to make some T-shirts. OBR times Team Bull.
Yeah,
exclusive drop.
I love it. I love it. We could have OBR on the front, team, or a big old bull on the back, and Team Bull.
I'm down.
That would be sick. That would be sick. That would be incredible. So, is there anything you'd like to leave anybody or everybody with before we head out tonight?
I'm straight. Just, use less size, don't blow your accounts, and look at the long term. This isn't easy, whether you're long-term investing or day trading. The internet gives you the intention that it is easy. Sometimes it's not. And just keep learning and keep grinding. That's really all I got to leave our friends with today.
All right. Well, I appreciate that very much. And for all the guys that know me that are here from OBR, I'm going to leave you guys with, if you zoom out on the 10-year chart of SPY, it's been going up for a long freaking time. And that's all I got to say.
And so keep doing that.
Yes, sir.
You're amazing, Clayton. You and OBR are doing great things. I appreciate you guys having me on. You guys are ballers.
Same to you as well. Same to you. And I very much appreciate your time. Thank you.
Always. Well, 10-4. Have a good rest of your night, and let's keep crushing it, baby.
I'll do the same. And I expect the same out of you. I appreciate you. You take care of yourself.
All right, man. Peace, bro.
See you, Beast.